Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are going to work on the assigned homework problems from the digital study guide for Chapter 7. These are the exercises from Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and can easily be remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Okay, so let's see here. Yeah, the first problem is 7-31. Now it says prepare a bank rec. Let me get my pen here. Cliff's Construction checkbook lists the following. Okay, so this is the check register. And then he receives his April bank statement right here. And it says prepare Clifton's bank rec on April 30th. How much cash does Cliff Construction actually have on April 30th? And then it says prepare all necessary journal entries to update the cash account as a result of the bank reconciliation. So just as an FYI, I'm not going to go through a lot of the theory here on doing a bank reconciliation. If you were watching the theory videos, you will know that I gave the web address for the student community in the Math for Business / application section on the left-hand side. So if you're, obviously you know where the business group is because you're watching this video, okay? But on the left-hand side of the business group, there is the Math for Business / applications section. And in that section, one of the chapters, I believe it's right around chapter 7 or so, was about doing bank reconciliations, and I went into a lot of detail about doing the bank reconciliations there. So if you need the theory aspect of it, go back and watch those videos. If you've had Math for Business and Finance before or Math Applications, then this is just a repeat from that book. So it's like this is an important concept, and therefore it's repeated from subject to subject, but it doesn't mean I should cover the theory again and again. So you can, if you're taking financial accounting for the first time and you didn't have the math, then you can read the textbook. And I just pointed you to where I created the theory video, so go back and watch those theory videos there. So these exercises, we're going to have several of them, but it's going to be, just me, the application of those concepts. And along the way, if I see something that's important, I'll just, kind of like point it out. So here's the same data, and I'm going to divide the screen in half. And on the top, I'm going to make this my bank, meaning my bank statement. And this is going to be my check register on the bottom, okay? Now I realize that the check register is on top here and the bank statement is on the bottom here, but well, yeah, okay, maybe I'll do it the other way, and so I can keep things aligned here. All right, so I'll make the check register on top and the bank statement on the bottom. All right, so what you're doing is you're comparing, one with the other, and anything that is in your check register that is not on your bank statement, you'll have to put on your bank statement, and vice versa. Anything in your bank statement that is not on your check register, you put on your check register. So we have to start out with a beginning balance, and we'll work with the check register first here. So we have to start out with a beginning balance, and our beginning balance is the ending balance. Okay, no, we have to start with something, so we start with the ending balance. And so the ending balance in our check register is 3606. That's that number right there. Okay. Now, the balance on our bank statement is 1,363. That's that balance there. Right now, what I need to do is I need to say, okay, what's in my check register? In my check register, is there anything that is, are they on my bank statement? So kind of like what I'm doing here is that's why I wanted to put the bank first, bank on top, but the way I do it is you look in the check register and you see see if it's on your bank statement, and anything that is in my check register and not on my bank statement, I put into my bank balance. So let me kind of like do that. All right, so I'm looking at check number 922. Is it on? It's for $10. Is it on my bank statement? Yes, it is. It's right here, so I don't need to worry about that. Then you see I have a dividends received of 325. If I look on my bank statement, I see the 325 right there as a deposit. When you're doing this, I'm just going down the list here, all right, by item. But if you're, and this is a relatively small sample, but if you had, several pages in your check register, I would basically go down through my checks first, and then I would go down through my deposits. But because we have so little here, I'm just going down the list itself. So I look for check number 923 for $41, which is right here. 924 for $76. Whoops. It's for $67. Now, notice 924 here has an amount of $76 and not 67. Okay, so even though it's on here, it's a different amount. So we're going to have to make some kind of adjustment for it. Okay. All right. 925 is cash for 163, which was right here. Then I have checks number 926 and 927. They don't exist anymore. Okay, they're not on the bank statement. So since they're on my check register, I need to put them on my my bank statement. So my outstanding checks, I have check number 926 and 927, and they were in the amounts of 186 and 527, which gives me a total of $713. So I'm going to take subtract $713 from the 1,363. So that's 0.5. That gives me a balance of $650, meaning these are two checks that if they had hit the bank account, that would have reduced my balance. So I'm down to a balance of $650. Now, now I need to look and say, okay, what other adjustments need to happen on my bank statement? I'm sorry, yeah, what other adjustments that have to happen on my bank statement? And I have a monthly sales deposit here of $2,890. Notice that's not part of the deposits. So I'm going to, my checks is a deduction, so that's less my checks. But then I'm going to add my deposits, and we only have one in the amount of 2,890. So I'm going to add that in, and I end up with $33,540 is my final balance to my bank statement. Remember, all we're doing here is we're saying, okay, here's what was in my check register, and what I'm doing is I'm looking at what is in my check register that is not on my bank statement, and I'm adding those amounts. So I had determined that I didn't see check number 926, and I didn't see check number 927, and I didn't see this deposit for $2,890 for the monthly sales. So I have to take my ending balance from my bank statement and subtract out those checks, because that would have been money coming out of my account. And then I have to add in the deposit, because that would have been money going into my account. So my final balance ends up being $3,540. Now, I have to go in the opposite direction. I have to go and I have to go in the opposite direction, and let me do this in blue here. I'm going to say, okay, well, what is on my bank statement that I don't have on my check register? Okay, well, we know that we have an error right here. All right, so we're going to have to consider that. But well, I'll do that last because that's just a little more complicated. So when I look, I can see that, all right, I'm not concerned with the beginning balance, and I know the deposit was taken care of, and I know all of these checks were taken care of. The only other things that I have on my bank statement that are not in my check register is this printed checks and the service charge for $32 and $25. So from my check register, it would be as if I was actually going to write them in here. In other words, I'd say, okay, this was $430, and I would write in printed checks for $32, and I would write service charge for $25. Remember, they're not in the check register, so I have to write them into the check register. But when I'm doing the reconciliation itself, I'm just looking at the reconciliation, so I'm going to make this just print check. So that's a deduction of $32 because it's money coming out, and I have a service charge of $25, so that's money coming out. So right now, the balance in my account is 3606 minus 32 minus 25 is 3549. But remember, we have this here discrepancy right here, okay? And the discrepancy is, we said that the check was for only 67, but when it was cashed for 76. That's a $9 difference, right? So most likely what happened is when whoever wrote it into the check register, just transpose the numbers, okay? So if the check was cashed for 76, it should be 76 in our check register, unless of course it should be 67, and then, because it is possible that the bank makes an error, and then you'd have to go to the bank and have them look it up and, find it, and then make the adjustment on their books. But for the most part, everything is scanned. Okay, so that doesn't happen. That happens very infrequently. So if it's more likely that you made a mistake in your check register and that the check was actually cashed for 76. And since it was cashed for 76, that is the effect on your books. I mean, you can't say, oh, it was only supposed to be for 67. Well, then you're $9 overdrawn is what happens. So you have to either figure out where the error is, and if it was on the bank's fault, right now you have to reconcile the bank statement to the way it is. But when you're figuring out where the error is, then if it was the bank's fault, then you'd have to have the bank correct it, and that would be part of your next bank reconciliation. But for right now, you have to take it for what it is. So since you have this $9, error for check number 924, I'm just going to write check error, and that is in the amount of $9. We're deducting $9 more because it should be 76 and not 67. So when I make that deduction, I end up with 3540, which is my final balance. And I can just write ending balance here. Okay, so now I have to make that check error. of $9. So now when I go and I'm writing in my check register, I have 3606 minus 32, which gives me 3574 minus 25, which gives me 3549, and then 3540. Okay, so when I've done the bank reconciliation, which is what we're looking at right here, on this side, I do this bank reconciliation, and I determine that I actually have a balance of $3,540 in the account, because that matches what I have on my bank statement here, right? But remember, any of these here adjustments you make to your check register, you actually have to put them in your check register, okay? You can't just have monthly sales of 3606 and say, oh yeah, these were my adjustments. No, your true cash balance is 3540 right here. You have to put those you have to make those changes to your check register in order to make sure that you're looking at your true cash balance all of the time. Okay. Now, as a quick aside, a lot of students don't realize this, or and it's not like covered too much in the text materials, because they only teach you bank reconciliations for 1 month. But let's say we go into the next month. All right, now remember, this was April, right? Right now, let's say we go into the next month. We're going to get a bank statement for May. And on the May's bank statement, you're going to see your deposits, and you're going to see your checks and your other charges, just like you do right here. Okay, just like on this bank statement right here. Now here's the thing. When you did this reconciliation, remember you said 922 was canceled out because it was on my bank, it hit the bank. 923 hit the bank, 924 hit the bank, 925 hit the bank. But 926 and 927 did not hit the bank. Right? So when, let's just say, and I'm going to make something up here, all right? And I'm going to just sort of like write it here to just try to give you a little bit more of a visual. Let's say you had check number 926 actually clears the bank, and that's in the amount of $186. And then let's say the next check is 928 for 54, 929 for 60, and 930 for 13, and 931 for 128. All right. What I'm looking at here is, just to make sure you're clear, that I'm looking at the May's bank statement. And on the May's bank statement, these are my outstanding checks. Now, when you're going to do your May's reconciliation, realize that in your check register, you would have had 928, 929, 930, and 931 written in your check register. So when you're coming back and you're doing your May's bank reconciliation, you're going to have to look and say, okay, and I'm going to change colors here, did check 926 hit the bank? Yes, it did. Okay, so that one's good. But you're still going to have to look at check number 927, right? So 926 was, actually was cashed. But when I'm looking at 927, I don't see 927 here. Right? So when you're doing the May's reconciliation as part of the outstanding checks, you're going to have to include the 927 check. All right. Some students don't realize that, they kind of like just look at the information that's there in their check register and in their bank statement, and they just treat it for that specific month. No, anything that is old from previous months, previous accounting periods that have not still hit the bank account have to be carried forward from one reconciliation to the next, from 1 month to the next. So what I'm trying to point out here is that, yeah, your check register for the month of, this was April, and for the month of May, you would have continued to add transactions, these checks and deposits. But when you go to do your next period's bank statement, you have to look at whatever still is outstanding, whatever has not, whatever is on in your check register that is not on your bank statement yet. So if you have a deposit, like let's say this $28.90 didn't hit the bank for some reason, okay, maybe you gave it to somebody and they ran away with it, all right? They stole it. Well, it didn't hit the bank, and that's still outstanding, so you would have to include it on your bank statement. Or, maybe, this Jamestown Properties, for whatever reason, maybe you mailed it, you wrote the check out to them, and you mailed it to them, and they got it, but maybe they, they lost it or something, okay? Well, you don't want to just go and say, oh, well, this here $527, they didn't cash it, so that means I have $527 more, so let me just get rid of that check. No, you can't do that, right? Because what if for some reason, maybe, like I said, that maybe it was just stuck in the bottom of a pile or something, and somebody just missed it. And now you say to yourself, okay, they didn't cash the check, so now I have $527 more. Well, what happened? So you write your checks, and your balance in your checking account gets down to, say, 230. And then all of a sudden, Jamestown Properties sees this check. They realize they didn't cash it. They make the deposit. Now it hits your bank and you're overdrawn. Okay, so if you write a check, you have, and I've seen checks sit there, as not cashed for over a year. All right, even if you've called the company, all right, and you've said, hey, you don't, I'm looking and I'm saying I don't see, this check has been cashed. All right, as long as that check sits out there with a possibility for it to be cashed, then it needs to stay on your books. If you think that it's never going to be cashed, then what you go to the bank and you tell them, hey, I want to have a stop payment put on that particular check, all right? And usually that costs like $30 for them to do, right? And then that's the way you would be able to say, okay, I have this 527, but I wouldn't do that until the checks got really, really old, like a year old or longer. I mean, that's kind of like the rule of thumb I've been exposed to. All right, so that's just a little bit of extra information. And let me clean all of this up here. So that's just to give you that idea that, hey, when you're being taught in the textbook how to do a bank reconciliation for one particular accounting period, okay? But the reality is that the periods, go from one to the next, and anything that's still outstanding in your check register needs to be carried over in, on the bank statement for the next period, right? So the question now becomes, we were asked to we have to make journal entries. Okay, so the journal entries we have, because remember we have, this is our check register, and when we add them to our check register, these are transactions that are not on our books. The check register is a separate book. It is not the general ledger cash account. And if you watched one of the theory videos, I had quickly explained that you have a check register, you have a general ledger cash account, and then you also have your bank. Okay? And all three of these should be the same. That's the true reconciliation. All right. Yes, when you're doing a bank reconciliation, you're reconciling your check register to your bank account, right? But your check register should match your general ledger cash account, right? So that when the auditor comes in, he's going to want to look at your general ledger cash account, and he's going to want to look at the bank statement to see, that you have the correct cash balance. Because remember, the check register is just uh, a manual book. You write, in a physical book in order to keep track of your cash, um, so that it's at this moment in time how much you actually have. As transactions occur, you may make journal entries, okay, but you might not post them into your cash account until a later date. So you don't, what you have in your general ledger cash account isn't necessarily the exact amount of cash that you have, on hand, or as to what's in the bank statement. So there's that relationship between the three, all right, that you have to consider. So um, what you're doing here is you're taking what is on your check register and you're doing the reconciliation to the bank statement, which is here. But what you have in your check register here as transactions may not have hit the general ledger account yet. You have to make journal entries and post them. So any changes that you have, any adjustments that you have for your check register, like these here, you have to make journal entries for and then post them to your general ledger accounts. So this here check for check number 924, right? It's for Fergus and it was a payment on account, right? So the original, and that's this $9 we're going to make this entry for. So it was a payment on account. Well, what's the payment on account, right? Well, I'm going to credit my cash because I'm decreasing my cash, and I'm going to debit my accounts payable, right? Because I have a check, I'm paying it out. And so that would be in the amount of $9. So if I made that journal entry for this transaction right here, which is this one right here, right? Then the 67 plus the 9 would be the $76 that was actually cashed at the bank. So that's one journal entry that you're going to have to make. Right. I'm sorry. I'll rewrite it, but I'm going to erase this. So pause the video if you have to. Oops, $9, and write that down. So go ahead and pause and write it down if you have to. All right, so I'm back and I'm going to erase it. And now for the second journal entry, well, I have a printed checks and a service charge. Generally, I would call those bank charges, all right, bank fees. And if you watch the theory videos, you saw that generally we have a general ledger account, which we call bank charges, or it would be called bank fees. And if you look at your chart of accounts and you don't have an account like that, like these, then generally you'll just use the miscellaneous expense account instead. Right? So to keep things simple and to match up with what is on the solution for this particular problem, we're going to debit miscellaneous expense, and of course credit cash because it's a reduction in our cash. And 32 plus 25 is 57. And so that would be my journal entry. And of course I'd write in the description here something like to record printed checks and then show $32 plus service charge $25 in preparation of the bank's reconciliation for the month of April. That would be my description that I'd write here so that I can see I had the 32 plus the 25 which gives me that total for the 57. Or, you could just make two separate entries. One, as, you would make the entry for 32, and then write the description to record printed check fees in doing the bank reconciliation for May. And then you'd write a second entry for 25 to record the service charge in preparation of the bank reconciliation for the month of April. I kept on saying May, it's April, sorry about that. But the point being here is you can make two separate entries, and that's just a lot of extra work. In this particular case, especially when you would write a description for this. So I would just total them up and make it 57, and then include that information in the description. Right, so that's it for this bank reconciliation. Go back and rewatch it again. I realize it's 30 minutes long already, but I did the reconciliation. It would have taken a lot less time, but I added a lot of extra information in here that I'm not going to include in future videos. And again, some stuff was already covered in the theory video. So it, like the going forward, showing one bank rec, and then what happens when you go to the next bank rec and you still have the outstanding items to look out for. But if you didn't get all of this, go ahead and rewatch the video a couple times, watch the theory videos. And if you still don't get it, feel free to contact an instructor. All right, and I'll see you in the next video for the next problem.